Good morning, trading world. It is November 30th, 2021, and this is my pre-market outlook. It is about 7:52 a.m. in the morning, and how things change during the overnight session. Today's title for the analysis is, will this rally pass or flunk the test? Those of you who watched the video yesterday, we started looking at the longer term trend using the 1, 2, 3 criteria to see if we have a trend change. It had been established previously. I think last week I covered a video where the intermediate trend had changed using the 1, 2, 3 criteria. Now we're looking at a longer term trend. We have a 1-year daily chart here that we're going to get into. And let's get going. All right. Let's see where we left off. When we last looked at this chart, when thinking about the 1, 2, 3 criteria, all we had was a trend break. And the one in the 1, 2, 3 criteria is that we get a trend break, which happened here, and we stop making higher highs, and that has also happened. Now, this is the preceding high, and I drew a line to bring that forward. That is the potential area where we look for a retest to see whether we have a trend change or continuation. However, looking at things and looking at order flow and looking at indicators, it is possible that we may not even make it back up to the 473 area. I'm not saying that it will happen, but I'm just listing the possibilities that the test could come and fail anywhere in this area. So it's not a given that we make it all the way back up to 473 and fail. It's not a given that we stop at 473, because if you all are familiar with chart patterns like the double bottom or double top, in the double top, it is quite often that the failure actually pushes just above the previous high before it reverses and falls. So all of these things are possibilities, and we have to depend on our indicators and internals in order to see that, by looking at divergence and convergence of that indicator when we get to these reaction areas. So if price is making higher highs, if we get price making higher highs, we should be looking at our indicator, volume, and internals, whichever you feel most comfortable with. And if there's truly going to be a reversal, before we get to this area, you should start seeing volume diverging from price action. Your indicators diverging from price action. So this is the most important thing that I will be looking for today to signal whether I put on a position when we get up here and retest or what have you. This is pretty much a key criteria for any position that I put on, because I do trade pretty much like a contrarian type of style most of the time, which means I'm always looking for reversals. So that's the important test that I'm looking for. So we're going to watch for this test and failure, or this test and breakout of that preceding high. Now, going into today, looking at key resistance levels. Let me bring that up here. Give me just a second. Before I move on to the key levels, the last part of the 2 and 3, when it comes to this 1, 2, 3 criteria, we have the 1, and this line here, this may be where we have established our minor low after this minor sell-off here. So the last part of the criteria is that we're looking for either a test and failure here to break below this area, and that will let us know that the trend has changed. The moment we break and close below this level here, that lets us know that this longer term trend has now changed from uptrend to a downtrend. And if that is so, we can look for a correction to happen very soon, taking us at least 5 to 7% off of the highs. And it could be the introduction for a bear market that could start the beginning of the year. Because I'm not so sold that the money managers are ready to let go of possible bonuses that could be made. So there are chances that we could test lows and kind of chop here throughout the rest of the year. But in order to trade the most effective, we have to come in and assess what we have that day and trade what we see that day, whether that puts us on the bear side or the bull side. So that's the last part of the 1, 2, 3 criteria. So now I can move on to key resistance levels and the scenarios for today. Okay, real quick for today, these are the key levels to look for reactions at. On the resistance side, we have 461 area, 463 area, and the 466 area. Key levels of support to look for reactions at is going to be 458, 456 and the 455 area. Now let's take a look at how these areas can play in today's scenarios. Scenario number one could be a range day type structure where we have this type of price movement. We find the key level here of 463, and at that point, let me write that, 463. We find that it turns out to be our first resistance for the day, and then we chop back down toward our support, or first support, of 458, and possibly bouncing and pushing the boundaries. For those of you that have seen my videos for a while, there are thousands of possibilities or variations of a range day. I'm not going to go through all of that this morning. But just know, on a range day, the basic principle is that we usually establish a high and we establish a low, and we basically chop back and forth between that range. Now, the different variations of that, we can have a range day that can have a bull bias to it or a bear bias to it, and that's where we push those establish highs or lows one way or the other. Even though we established 463 as a high, it's possible that we can push up past 463 and then chop back below. That's just a variation, but either way, the common principle in all of this is that when we get to these reaction areas, you pay attention to the indicators to see whether we have convergence or divergence. Divergence is like what I said earlier, where if price is moving higher, you have a indicator or internal that's getting weaker by moving lower, and that signals that that price action will not last, and we have a reversal that is possibly coming. Same for the opposite side. If we're moving lower, indicator or an internal is moving higher, signals a reversal. Convergence is that when we get to these reaction levels, if price action is still moving higher and indicator is still moving higher, then that says we have strength to push through that barrier. So that's the key thing to look out for today. Scenario number two, we have what I like to call a tranche day or rounded reversal. And one of the key factors of a day like this, or if we have this type of structure, from the opening, we take off. This morning it will probably be to the upside. We take off and don't look back. Once we get going on the uptrend, it is an explosive uptrend. And we go until we get to the midday or lunchtime chop. And you're going to look for these key areas of resistance, the 461, the 463, and the 466, because these could be the areas that this type of day would stop at. And it doesn't necessarily have to stop at 466. And I'll give you some insight on that at the end. But the basis of this day, a powerful trend up, lunchtime chop, we kind of chop sideways, and the key to this day is that once we get this lunchtime chop, you're going to want to pay attention to your indicators, pay attention to volume, pay attention to the internals, because as we get this lunchtime chop, even before lunchtime chop on this day, we're going to come out the indicator will be at a particular high. Your momentum indicator will be at a particular high, especially the internals like tick. And you're going to see divergence basically within the first 15 minutes of the open. So you're going to see volume spike, but the whole time your indicators, your volumes, everything is going to be diverging from the entire time. That's what you have to keep an eye on. And if you see that when we get to this lunchtime chop, this is going to be the greatest place to put on a swing position for the next couple of days. Whether you're using just straight directional puts, or long puts, or preferably put verticals here, where you buy a put and sell a put at your target. These are defined risk plays that will be wonderful for the next coming days to weeks. So that's what you're going to be looking for. All right, our last scenario is going to be a trend down day type structure. And what happens on a day like this is yesterday's close is going to be very important. Yesterday's close was 464.6 on the spot. And usually on a downtrend day, we're going to come in with a up move and usually find resistance either somewhere before or at yesterday's close. And it's possible to do a little sideways chop, and then we're going to reverse it down. And this is where the key levels come into play. On the trend day down, we're going to want to look for those reaction levels. Usually midday, we're going to get the usual midday chop, but we're going to have a powerful move down on that midday chop. And usually with the trend day down, we get the midday chop. You usually get a pullback or the opposite trend of the main trend in the morning, and then you may get a little continuation. That's usually how a downtrend works. And usually on a downtrend, you're going to have high participation from your advanced decline line. So you would come in on a day where everything, especially in the condition that, the type of market condition that we have right now, on your heat map, you're going to see lots and lots of red. I like looking at things via the index or advanced decline line, and I'll usually have the S&P 500 up, and you'll see advancing declining issues, and you'll see the declining issues will thoroughly outnumber advancing issues. In this type of condition right now, I wouldn't be surprised to see on the S&P 100 if we have 95, 96 declining items versus 4 or 5 advancing items. That's going to be the key sign for a trend down day. those are the three scenarios to look for today. I want to give you a reminder, because as I look at order flow this morning, order flow is very, very negative. There is a lot of bear order flow. However, when you come into a day like this, what you have to keep in mind, if the majority of the market is leaning one way, as like today where it's bearish, and we get the opposite reaction, that opposite reaction will be very explosive. So the key thing to look out for today, this is why the number one scenario, the number one and number two scenario, that change day could be it could be the highest probability of the day type structure that we would see today. And when we think about this opposite reaction, for example, if we get somewhere around this 464, 466 area and we don't reverse, we don't head down, we could see a very, very explosive move that pushes us up towards 468, 470. So that's one thing to keep in mind today. Whenever you have a market that's leaning one way, and for whatever reason we don't go that way, that usually stems into being a trend day, could turn into a trend up day or a change day. So that's what we want to kind of keep in mind. But I've armed you with the three scenarios that could take place today. You want to keep your eyes open, understand how to use your indicators and look for the divergence and convergence of price action. So, as always, please know and understand your risk, because these days could be very, very explosive. I'm not saying to the upside, to the downside. With the market conditions that we have, it could be very explosive in general. And we could see price action explode in both directions at some point. We could be up 10 points, 15 points, as well as down 15, 20 points the next minute. Just thinking back, I had someone comment on, I can't remember whether it was on the videos or I know it was on the Premarket, about how vague the statement was that I made about fortunes being made or lost during conditions like this. An analogy that I like to think about is that the market is a road. It's an expressway. We've been on this expressway hundreds, some of us thousands of times. But the vehicle that we're in changes. So some days we're in a Hyundai and we can putt along, and levels are easy to see. It's easy to find your exit or off ramp, and it's easy to get on or go with the flow of traffic and merge into traffic. It's easy. But in conditions like this, it's almost like having a Lamborghini, where things will move so fast. Even though you're familiar with the road, that Lamborghini may get hard to handle in exiting some places or going around some curves where we could crash and burn. So this is what you want to keep in mind. This is why I stress knowing your risk, because in any trade that I enter, the first question is, how much can I lose? And that's a mindset that will keep you successful, because the number one thing or the most important tool in trading is your money. So you always want to protect your capital. If you protect your capital, the longer you can last to see the successful days. Because the only probability that is 100% in trading is that eventually or at some point in time you will lose money. So we want to cut those losses short. And that's how I will end today's analysis. I ran a little longer than I wanted, but wishing you a successful and profitable trading day. Hope this helps. Have a great one.